Hi everyone, today let's talk about the unemployment rate, then we'll look at the rest of the data, then we'll look at the charts, then we'll look at my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So jobs numbers came in extremely good for the economy. Non-farm payrolls adjusted by 199,000, which was higher than the expected 190 and well ahead of the October numbers at 150. The unemployment rate dropped to 3.7, down from 3.9. That's a pretty substantial drop. We'd been seeing that tick higher slowly. And now we got a little bit of a cut there, so we're back into that kind of mid-range between 3.4 and 3.9 as the low and high markers. Healthcare added 77,000 jobs, government always adding a bunch of jobs, and then manufacturing at 28,000 and leisure and hospitality at 60,000. We even had the participation rate edging up slightly to 62.8%. And looking at that non-farm number, you can see it's kind of right in that mid-range. We also saw average hourly earnings increase by 0.4% and 4% from a year ago, which is still higher than you would want it to be in terms of inflation, but that is much lower than we've seen over the past year and some change. And overall, this is pretty good. Probably a little bit stronger than the Fed would like to see in terms of their hiking cycle, but it does mean that the economy is still remaining strong and the jobs market is still pretty healthy. And looking at the economic calendar just briefly, you can see all of those numbers. And then we saw the Michigan numbers come in at 3.1% versus 4.3%. And 5-year expectation at 2.8 versus 3.1. So much better on the inflation expectations there from Michigan than expected initially. And then consumer sentiment and consumer expectations much better than expected. So overall economy still looking pretty good. And I thought this would have pulled the tech and growth sectors down a little bit from a yields perspective, but that's not what we saw. We kind of saw all markets go higher over the course of the day, and we'll see that on the charts. Moving over to Max Pain, we ended up at 460, Max Pain at 453, so we continue to close to the upside of Max Pain. We're watching 459 and 461 as the up levels, and that is basically where we finished, just in between those levels. Very close to the top of the puts. I would have called that 462 in this case. Didn't quite get there, but still a very strong close for the week. Put call ratio and total options at 2 and almost 1.7 million options, but still a very strong close, even with all those calls in the market. Moving over to the charts, you can see we did break out here. We're at that level. Ended up holding at 457.57 after a pretty big wick down on the data. Let's go ahead and zoom in on that a little bit. You can see that wick down all the way down to the 200 on the data. Recovered all of that very quickly and then ended up rallying the rest of the day. And this does look like an acceleration at this point. So we've moved higher, consolidated, tried to dip lower, couldn't do it, gapped higher, and then we rallied again here today. Momentum ticking back towards bullish. RSI still in overbought conditions at a 70.02 on the daily chart. But at this point, it does seem like we're going to accelerate higher, similarly to what we saw on the Dow. Moving over to the NASDAQ, similar thesis. We got a dip low and then a continuation higher, all the way up to my 392.35 level. Above that, I'm at 394.81. This still looks like it could be a double top to me, so I am still watching that as a potential. You can see this first top, dip low midpoint. We're kind of coming into that second top area. If it does break down from here and takes out the midpoint, then we're obviously going to be in a much weaker market. I don't necessarily think that that's going to happen, but you do have to pay attention to all the possibilities. Right now, everything says we're going higher. Momentum continues to tick back towards bullish. RSI, you want to see that break above the SMA on the daily chart, but we're not overbought. We are going higher 2 strong days in a row, looking for the break of that 392.35 level. Moving over to the Russell and the Dow, both of these broke out from those trend lines we looked at yesterday. And you got this line here marking this as a potential flag. So if we rally up, this would be your price target up into this 194 range. And we did get another rally here today. Everything looks clean on both of these. 189 for the Russell is the next level and 365.11 for the Dow. Moving over to Apple and Tesla, these have not changed. Continuing to trade in this channel, continues to go higher. Next level, 196.79. Tesla continues to chop in between these two levels, 232.57, and these kind of wick highs here at 246.69. Didn't quite get there today. I would expect to see that tested on Monday. Bullish momentum, bullish RSI here on Tesla. So if it's going to break, I would expect it to break higher. Currently, we talked about that being possible yesterday. Continues to hold above this downtrend line, but can't seem to get above this resistance. Moving over to Lulu, just to follow up on yesterday, this ended up being a colossal run. We saw their earnings come out. They threw a big wick down to this 430 area. And then on the open, that first candle of the day rocketed higher all the way up to this 490 area. And zooming out, we talked about that yesterday. The high was at 484.50. And then we broke that here today. We got a new high close here for Lulu. Very, very strong. Even with the weaker guidance, I was honestly surprised that it broke this much higher. The trend was still very bullish, but apparently the guidance was not strong enough to break that down, and the trend continued. Moving over to staples and discretionary. Discretionaries continue to rally, looks clean. Bullish momentum, RSI still overbought. The trend continues to melt higher. Staples actually pulled back here today, 0.69%. Bearish momentum, RSI has broken below the SMA. We were very close to getting above it in yesterday's candle, and then we broke back down here today. So this looks a little bit more bearish. You can see that SMA holding above it. Broke down, retest, breakdown. That's not a great sign. So it does look like 70.85 is starting to be a little bit more of a resistance point. The trend is still intact, so you do have to respect that. Could just pull back to the 55 EMA, establish a higher low, and then rally from there. But it does look like we're going to see a little bit deeper pullback now on staples, waiting for that 21 and VWAP to break at 70.02. Moving over to breadth on the 20 and the 50, you can see the 20 has not really done anything. Did throw a slight wick lower. Momentum and RSI are both bearish on that. You can see we had a high, lower high, broke down. SMAs, the 9 and 21s are about to cross, and if this breaks down further, that could be interesting. Does kind of seem like we're seeing a little bit of foreshadowing there with markets going higher and breadth starting to wane here on the 20. But then you have to look at the 50, and you can see we got another slightly bullish day. We're still holding in the same zone. We're not all the way at super overbought yet, but we are very close, and the 20 is starting to show weakness. Moving over to yields, we talked about how the jobs data was pretty strong for the economy, and that did send yields higher a little bit. You can see the 2-year 2.74% to the upside. Momentum and RSI both say this is going higher, probably up to the 21 EMA around 4.8. Similarly here on the 10-year, you can see we did touch that level, pulled back slightly, but RSI broke above the SMA. Momentum seems like it's starting to tick back towards bullish a little bit. If this does start to see a little bit of a trend reversal, that's going to be weaker for growth and for equities as a whole. Moving over to the dollar, we talked about this yesterday being a potential test of that 9 EMA. Did test it, did hold. Tested it again today, did hold again, rallied higher on a bullish candle, 0.34%. You can see that rallying up off the 200 on the hourly chart. Momentum pulling back slightly, but daily chart still showing strength. RSI continuing to tick back towards overbought conditions. Want to see it get above the 50 and hold if it's going to turn more bullish. But overall, the dollar continuing to go higher a little bit in the shorter time frames. Moving over to volatility, move index pulled back pretty substantially. VIX broke down really strong, took out that slight uptrend I was watching. Now we're back into these lows around that 12.3 area. So not great if you were looking for a bearish move. Doesn't mean it can't happen, but this has broken the little structure that we were looking at. Now we need to reestablish and look for a move higher later. Moving over to my accounts, I continued to roll out and up on pretty much everything, trying to get as much money on this up move as I can. IWM continues to look strong, so I rolled out to 7 days up to 183, which gives me a max profit of 188, so about another $1 over the next week or so, while still giving me about $5 of downside protection. So not a bad position, not super bullish, but not super bearish either. And then looking at the Qs, still have my 200 shares. Those did well. Continuing to hold some puts. Those continue to do well on the shorter time frames. That expiration is for Monday. And then I have a 389 for 5 days from now and a 390 for 3 weeks from now. That's obviously a longer hold for $8.21. So that would put my max profit on that position all the way up to 398.21 on these 200 shares. And then I have these puts and calls almost as a strangle. They're not on the same strike, but that's basically how I'm trading it, trying to collect credit in the shorter time frames while giving myself a little bit of protection. Let me know down in the comments section what you thought of the unemployment data and what you think of yields going a little bit higher, but markets going higher at the same time. Definitely interesting. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.